2023 will be a year where several millionaires will be created because it is during these periods of recession that it is historically proven that the vast majority of millionaires are created. And if you look at the economic situation at this time, it is obvious that we are approaching this period very quickly. So, if you want to take advantage of this opportunity of a lifetime, better not follow anyone's advice. That's why in this video, we will follow the advices of the investors known for being the best in the world, Warren Buffett, being the CEO of Berkshire Hathaway with an average annual returns of 20.1% compared to the world's most trusted index, the S&P 500, with 10.5% annual returns. Warren Buffett is the man to be trusted during these times of crisis. Warren Buffett's investment philosophy focuses on the investment strategy presented by Benjamin Graham in his book, The Intelligent Investor, which is value investing. This consists in selecting companies with an unduly low price compared to what they are really worth. With that being said, how can we integrate this strategy with the current economic situation while being profitable in the long term? This is what we will see in the video. Without further ado, here is his first advice. One of Buffett's best tips is to always keep a long-term mindset as an investor. He believes that the best investments take time to be profitable and that patience is the key to success in the investment world. He often says that if you're not ready to own a stock for 10 years, don't even think about owning it for 10 minutes. This is because the stock market can be unpredictable in the short term, and it is important not to let the short-term fluctuations discourage you from your long-term investment strategy. It is for this reason that later in this video, we will see another piece of advice from Warren Buffett that could help you against this problem. So, stay well until the end of this video to learn more about this topic. Buffett also stressed the importance of not getting carried away by the latest investment trends. Instead, he advised investors to focus on core market activities and look for companies with a history of consistent profitability and a strong competitive position. It also encourages investors to invest in what they know and understand, rather than trying to pursue the latest stocks or trends. Do your research and have a knowledge of past business before taking the risk of putting your money on the line. Indeed, despite the rapid growth of cryptos in the recent years, Buffett mentioned that this method is, according to him, a method called the get rich quick, and that it was not a part of his investment mentality and psychology. He mentioned that the more and more investors want to have quick and effective results, but according to him, wealth does not come overnight. And in that world of investment, time is the most crucial asset for rehabilitation. He therefore avoids these kind of investments and remains faithful to the safest method for him, the value investment that we will explore further in this video.
Cryptocurrencies basically have no value, and they don't produce anything. And what you hope is that somebody else comes along and pays you more money for it later on. But then that person's got the problem.
He gave you some Bitcoin. What's it feel like to be a Bitcoin?
I don't have any Bitcoin.
You don't?
No.
Okay.
No.
You don't own Bitcoin?
No, I do not own one. I don't own any cryptocurrency. I never will.
Another of Buffett's key pieces of advice is to diversify your investments across different companies, industries, and even asset classes. He believes that diversification is crucial for spreading risk and ensuring that a downturn in one area of the market doesn't have a significant impact on your overall portfolio. He often says that diversification is a protection against ignorance, and that it makes little sense if you're well-versed in your investments. He advises investors to avoid having more than 10% of their net worth invested in one stock, as it is considered gambling rather than investing. In one of his letters to the shareholders in 2018, he wrote, "When more than 10% of your net worth is invested in one stock, you are gambling rather than investing. This is because even the most promising companies can experience unexpected difficulties, and it's important to have a diversified portfolio to minimize the risk." Before we move on to the next crucial advice from the best investor of all time, if you enjoy this video or this kind of content, or have learned anything since the beginning of this video, please consider subscribing to this YouTube channel, because every week we release a video related to finance, investment, and entrepreneurship. So also activate the bell icon to be notified of our upcoming videos. Thank you for doing so, and now back on the video. Another important aspect of Buffett's investment strategy is to focus on value. He advises to look for companies that are undervalued by the market, and he believes that these are the best opportunities for long-term growth. This is a part of Benjamin Graham's strategy in his books, The Intelligent Investor, as mentioned in the introduction. This strategy is well known among investors and is the strategy that made Warren Buffett's famous reputation in the investing world. So it's not another one of these fake short-term methods. Value investing is an investment strategy that involves buying stocks that are believed to be undervalued by the market. The idea is these stocks have the potential for long-term growth and will eventually be valued at their true worth after the market correction.
The market's down almost 800 points this morning.
Yeah.
Concern for you?
Well, no, that's good for us, actually. We're a net buyer of stocks over time. And just like being a net buyer of food, I expect to buy food the rest of my life, and I hope that food goes down in price tomorrow. Who wouldn't rather buy it, at a lower price than a higher price? People are really strange on that. Most people, most of your listeners are savers. They should want the stock market to go down. They should want to buy at a lower price. And they have that feeling that they just feel better when stocks are going up.
The Oracle of Omaha often says that price is what you pay, value is what you get, and that it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. If you are curious to know about which value stocks Warren Buffett and several other major investors are investing in 2023, I recently made a video on the subject where I analyzed the investments of the 78 largest investors in the world and what their wisest choices are for this year that promises not to be like the others. If you're interested in this video, it is currently displayed at the top right corner of your screen. He also advises investors to buy when others are fearful, as this is often when stock prices are at their lowest and the growth potential is at their highest. As he once said, be fearful when others are greedy and greedy when others are fearful. In addition to keeping a long-term perspective and focusing on a value, Buffett also highlights the importance of discipline and patience in investing. He advises investors to stick to their investment strategy and not let the emotions guide their decisions. This means avoiding impulse buying and selling and not getting caught up in the fear and greed that can often drive the stock market. If you're able to stay disciplined and stoic in investing, you're going to be a profitable investor. Combining value investing, long-term investing, and diversification of your portfolio, you'll be well on track to maximize your gains to the full potential. Another one of Buffett's advice is to avoid taking on too much of debt, both personally and as a company. He believes that companies with too much debt are at a greater risk for failure, that it's important to maintain a healthy balance sheet. By diversifying your portfolio, you can invest in companies that have a healthy balance sheet and minimize your risk. It's important to remember that companies with too much debt may have difficulty meeting their financial obligations and may be forced to declare bankruptcy, which can lead to significant losses for investors. On the other hand, companies with low debt levels have more flexibility and can better weather financial challenges. This is why Buffett is always looking for companies with a strong balance sheet and low debt levels when value investing. He looks for companies that have a good cash flow, which is an indication of a strong balance sheet and a good financial position. By following this advice, investors can reduce their risk and increase the likelihood of long-term success in their investments. Remember that these are general principles, and it's always important to do your own research and due diligence before making any investment decisions. Thank you for watching. We hope you found this video informative and helpful. And don't forget to subscribe to our channel for more videos on investing and finance. And if you're interested in the best stocks that the best investors in the world are buying for 2023, I'll leave you with that video that appears now on your screen, so feel free to go check it out. Thanks again for staying till the end, and I will see you in another video.